Maximus Analysis here for July 15th, 2016. And again, we have a quiet day, kind of expected Friday, options expiration. A lot of people on the bull side. Again, it doesn't take a lot for weekly options to burn up very quickly. So again, just the keeping it up, hovering it. But we want to see what this pullback looks like if we do get one. Again, we will get one. How about that? But we want to see again that 21.1950 area hold will put us right in line with the previous highs as well. Again, we will get a little bit below the all-time high of 21.34, but that's not a problem, being that again, want to see if they're going to layer above these 21.19 levels and then give us some more action to the upside. They break below that, we want to make sure that we have the 2100 level secured, because then that brings us right back in the chop, and we don't want that. Let's look at the weekly close. We have 3 weeks up. Okay, let me kind of get all this stuff off because I'm going to be doing the newsletter. If you're not on it, please email me. The volume has lightened up, but again, as I spoke with last week's newsletter, a short squeeze can make the volume dry up a little bit, but there still could be more squeezing coming. I do have cycles coming in for July 22nd to basically the next 2 weeks, so we'll look to see if they're going to continue to the upside or if they're going to pull back and go into that and then give you a run back up. Again, we have to respect price action, and that's, don't go into central banks and because again, it's that stuff we're gonna have to trade it regardless. And again, we can't go against the price action currently. So yes, there might be stuff that you see in regards to central banks being an underlying move and but at the end of the day, are you going to go short that? Because if you do, you're getting squeezed. Or just don't trade because you just don't like the environment's underlying. But again, I'm here to look for trades, and again, that stuff can be discussed more at drinks, but not when we're trying to put capital to work. With that being said, let's continue with the NQ on the weekly time frame, and you can see that they're finally above this pennant that we've had. But again, I want to see what the retracements, how deep they're going to get into this position. Again, if they come back here, we're going to look for verification, and then we'll use more starter positions or quarter and half positions because of managing risk, because this one is still barely above the highs, and they got above it, and you didn't see the same type of squeeze here. So we still want to continue to look at that with a, on both sides of the fence. YM strong close into the above the highs. So again, we're you have a 3-day rule. Guess what? This is the weekly, so we have a 3-week rule, and we just want to make sure that we're looking at things accordingly. And again, a pullback into these prior levels at 18,000 is not something not to. Again, everyone wants to guess the top. What I said is that if this is the top, I'd rather get it here, and then coming back down here versus keep shorting, and getting squeezed. At least if you're going to be looking at something like that, you're going to look at volume. But what I discourage is, because this is a short squeeze, sometimes that volume can be a little skewed. Again, what I introduced the newsletter on last week is what we got to continue to look at here. Let's look at CL. So CL has come to a pivotal point right now, and again, the 44.78 area is somewhere to look at, and I'll show you why based on the weekly time frame. This could be setting up for more moves to the upside if they can hold that level, because that level puts them right in line with basically right about here. I think it's 44.75. Yeah, or 43.75. I'll actually post out the information, but you can see that puts us right here with this past move. So this is our guide line in the sand right here. That would set up the inverse head and shoulders type of pattern, which again, a lot of people will look at and will see. And actually, this one would be pretty good. When you have those, you would like to have the shoulder on whatever side of the fence you're looking at to be a little bit higher than the other one. So if you flip this around, if you're bearish, you want to lower right shoulder. So again, it's the same type of steel. If you're bullish, you want a higher shoulder on this side to continue. Again, I'm not looking at necklines, I'm just looking here, but we could potentially see if that's going to give us a more launching pad. But if they break down below these lows, and close. Again, the first one is 43, 42 and a half. The next one, forget it. This one doesn't hold, then they're going to go back to check this, and we'll continue to see what they do, because again, it could be sideways like this. But right now, for them to have this move up, and in a matter of a couple weeks, they haven't really moved. This is going to be busy. Sorry about that. But again, you take the Fibonacci, you say, okay, they haven't even gone 25% into this previous move, and they're already 1, 2, 3, 4, 5, 6 weeks from the high. And as regards to a percentage, what are we looking at? As far as a percentage, you can see that they've moved down about 14% regarding price, but not even 25% in regards to relative to this prior move. So this could be a bull flag setting up, so don't get caught. Again, I was short and I pulled off, actually not more so because of the way that the options move versus I should have traded common with that. But let's look at some names really quickly, going into, let's not make things too complicated. Again, you have gold still looking bearish, and again on the higher time frame, you could definitely see that this is basically an engulfing pattern of the price action. Perfect, yes, would be you would get the high and the low encompassed here, but I'll take this. And again, we want to see if that $1,300 level is going to hold. Now let's look at some stocks real quickly, and what we can see first is Apple, basically flat day. We want to see where that one looks. Again, the trend is down on the higher time frame, so we'll continue to look at that. A lot of people are looking at Amazon to say, is this the high? I would say don't play that game, but again, you can look and say it is up $300 or $250. But again, even the candlestick is not giving you much here. They could easily pop back up. Let it be a better setup to go short. Again, let them come down here, pop up, and then go back down to really get a high percentage type of trade versus trying to trade every red bar that you see, because they didn't even go close to last week's low. So be careful with that one. Who else looks bad is actually Facebook. It's kind of closed near. It's not that bad actually. It's just grinding, and again, I'd rather trade a better pattern. If they break back below here, I would start a position on the short side of 111. Again, I know everybody's so bullish, but again, I'm looking at the price action versus what the sentiment is. Sometimes I even look at the sentiment to go opposite, but the price has to. I'm not gonna say everybody's bullish, which is happening now, fear of missing out, which I put on yesterday's video, and instantly say, all right, it's time to go short. The chart has to give me some. Now, if we start getting upgrades of Facebook, I'd actually probably look the opposite side, because those guys are dirty. You know what I want to say. But I'm going to keep it kid friendly. But again, we'll continue to look at that. And again, also Tesla is where it sounds. Look like it might be setting. Oops, excuse me. This is not Tesla. It's QQQ. Look like it could be setting up for some more downside, but I'm not really sure, because now they're starting to grind both ways. And also, they did get a shooting star on the weekly time frame here. It's a small one, but it's right. This is just chop. Like, it's in the middle. I'd rather get a better pattern, quite honestly. So we'll continue to watch this. Again, a lot of squeezing, and we'll see what the pullback looks like, and I'll go from there. Take care.